If you ignore the signals we're about to cover, you really risk getting blindsided by a crypto crash that, frankly, everyone else saw coming. I mean, while the mainstream is cheering all-time highs in stocks, a staggering $140 billion just vanished from crypto in 4 hours. This is not just a dip. By the end of this, you're going to understand the 4 critical pressure points that are defining this moment of truth, and you'll know exactly what to watch for.
Okay, so this is the core of the problem, right here. On one side, you've got traditional markets just soaring, hitting new heights. And on the other, well, crypto has completely detached from that reality. It's taking an absolute nosedive. The huge question is why, and that's exactly what we're here to figure out.
So here's how we're going to break it all down. First, we'll look at that shocking decoupling. Then, the cracks appearing inside crypto's foundation. After that, the Fed and global pressures. Then we'll check out the bull versus bear standoff, and finally, what this all means for the market's moment of truth.
All right, first up, let's just try to wrap our heads around the sheer scale of this disconnect. We're not talking about a small gap here. This is a fundamental, seismic break from the rest of the financial world.
I mean, just look at this number. In one 4-hour period over the holiday weekend, the crypto market saw $140 billion in value completely, totally wiped out. That is not a minor correction, people. That is a serious shockwave.
And you can really see that divergence here. I mean, look at it. The trend lines for stocks, for gold, they're all heading straight up. Meanwhile, the 2 biggest names in crypto have just gone completely off script, totally breaking away from the rest of the market.
Okay, so let's dig a little deeper, because this isn't just about what's happening on the outside. There are some really serious cracks appearing from within the crypto ecosystem itself. And, they're getting a lot harder to ignore.
You want to see what I mean? Just take the Bitcoin ETFs. In November, these US spot ETFs saw their biggest monthly outflows since February, bleeding over $3.5 billion. That institutional money that was supposed to bring all this stability, yeah, it's heading for the exits.
And here's the really crucial point. The average ETF investor is now officially underwater. Now, these aren't your typical crypto natives. These are traditional investors. They might not have those diamond hands we're all used to. What happens when they decide to cut their losses and run? You could get a really dangerous cascade of selling pressure.
And of course, all this negative sentiment is just getting amplified by famous critics like Peter Schiff. And listen, he's not just attacking Bitcoin anymore. No, he's going after the big corporate players like MicroStrategy, calling their entire business model a fraud while their stock price just plummets right alongside Bitcoin's.
But the cracks, they go even deeper. We're talking about the very plumbing of the market here. We're talking about Tether, the stablecoin that's supposed to be the bedrock for so much of crypto trading. Well, their latest report shows a $34 billion shortfall in the actual liquid cash needed to back every single coin out there.
And this just perfectly illustrates this massive systemic risk. Think about it. They're running on a fractional reserve model, just like the traditional banks crypto was supposed to replace. So it forces us to ask this critical question. Is this liquidity gap the real time bomb, just ticking away at the foundation of the entire market?
Okay, so let's zoom out for a second. We've talked about the internal issues, but now let's look at the massive storm clouds gathering on the global macroeconomic horizon, because honestly, what's happening outside of crypto could have an even bigger impact.
Right now, the entire market is just laser-focused on these 2 dates. First, we've got the scheduled end of the Fed's quantitative tightening on December 1st, and then the big one, the Federal Reserve meeting on December 10th. Everybody is holding their breath, waiting to see if the Fed pivots and, well, turns the money printers back on.
But here's the thing. The Fed isn't the only central bank that matters. There's this huge risk emerging from Japan. It's called a reverse carry trade. Now, to put it simply, it just means that Japanese investors who own a massive amount of US debt could start selling it off to bring all that money back home.
And the scale of this is just immense. Japan holds over $1 trillion in US treasuries. For years, they were the world's anchor of infinite, cheap liquidity. But now, with their own bond yields hitting the highest level since 2008, that anchor, it's breaking. And it's threatening to pull critical funding from US markets at the absolute worst possible time.
So you've got all these internal and external pressures just colliding with each other. It's really no surprise that the experts are completely divided on what happens next. It is a true standoff between the bulls and the bears.
On one side, you've got your eternal bulls, like Tom Lee. He's calling for a strong year-end rally.
He's betting that the end of QT will flood the market with liquidity, just like it did back in 2019, and send risk assets like crypto absolutely soaring again.
But then you have the counter-argument from the bears, and it's simple. It's based on cold, hard data. Historically, when November is a red month for Bitcoin, December has almost always followed suit. So you have historical precedent in a direct collision course with that bullish narrative.
So, all of this brings us to the moment of truth. We are at a critical inflection point, and pretty much everything hinges on just a few key indicators that you really need to be watching closely.
So here's your watch list. These are the 4 pressure points that are going to define the next chapter for crypto. Number 1, what is the Fed's decision on December 10th? 2, what happens with those Bitcoin ETF fund flows? 3, can Tether hold its peg under all this pressure? And 4, what will Japan do? Each one of these is a potential trigger for the market's next big move.
And that really leaves us with the final provocative thought here. Is this a sudden crash we're seeing, or have we actually been in a bear market for months, and this is just the moment that everyone is finally waking up to that reality?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.